Hey YouTube, welcome back to another video. This is my financial focus, and in this video I want to talk about Twilio, which is a cloud communication service business. Basically what they do is they allow users to receive phone calls and send messages from all over the world, and they currently have phone numbers in more than 180 countries worldwide. And just for those who don't know, cloud platforms like Twilio allow people who use them to manage applications without having to focus on maintaining the infrastructure for their data centers and things like that. So in this video, I'm just going to be talking about this business, Twilio, and how they make money, how they operate, some of their competitive advantages, some of the risks that are facing their business. At the moment, in the last week, their share price has collapsed from $354 to $293. So we're just going to go into the annual report and also do a discounted cash flow analysis of the business, try to figure out their intrinsic value to see if this could be a good investment for us. So if you're new here, be sure to leave a like, subscribe to the channel, leave a comment down below letting me know what you guys think of the video after you're done watching it, and let's get started. So first thing that I want to do is figure out the intrinsic value of the business. The first couple of values that I'm going to need are the growth rates. I can find that just by going to Yahoo Finance and going to analysis, scrolling down for Twilio and seeing that it's 20.50%. So I'll just put that in right here. For the year, the growth rate for years 6 through 10, I'm just going to be conservative and say 10%. For the year 1 free cash flow, if I just go to Stock Screener and search up Twilio, click this, go to financials, cash flow, scroll down, we can see that the free cash flow for the last couple of years has actually been negative, which isn't really a good sign for us if we're going to be investing in the business. But for 2020, we can see that their free cash flows ended in 7.46 million. Then the net cash minus net debt. If I just go to Yahoo Finance, go to statistics, scroll down, and we can see the total cash 5.39 billion on their balance sheet as of 2020, and then total debts 1.29 billion. So we just subtract that from one another and we get $4.1 billion. Stock ticker is TWLO, and the shares outstanding, which we can see right here, is 166.93 million shares. So after plugging in all of those values, we get the estimated free cash flow for the next 10 years, as well as the terminal value, which is 10 times the year 10 free cash flow, basically whatever we would sell the business for in year 10. And then we also see the present value of these cash flows discounted back by our discount rate of 10% to the present value. So we can see that based on these values, the intrinsic value per share right now is estimated to be about $136.89 per share, which compared to the current share price, even despite this drop, it still seems to be overvalued based on our discounted cash flows model. But like I've said before in a couple of my other videos, keep in mind, this is not a comprehensive tool. It's not perfect. It's just one of many tools that we can use to reference when trying to figure out the intrinsic value of the business. But based on the current values, it would seem that with an assumption of a 20% growth rate for years 1 through 5 and a 10% growth rate for years 6 through 10, that a 30% margin of safety to buy into the stock would be $95 per share, and then a 50% margin of safety would be about like $60 per share. If we were to play around with the growth rate a little bit and say we bumped it up to like 20%, so that would mean the growth rate would stay steady from years 1 through year 10, then in that case the intrinsic value would be $177, which is still lower than the current share price. So even with the growth estimates from like professional analysts, Twilio's share price still seems to be a bit high, but as I said, not fully comprehensive, so we'll just have to use this as a tool for reference. Okay, the next thing that I want to look at is their annual reports, and the first thing that I want to talk about in regards to their business is just if we scroll down here, we get a quick little business overview of their business, item 1 right here. And we can see that Like I said before, they are a cloud communication business, and one of the ways that they've been expanding in the past 2 years is through acquisitions. In February 2019, they acquired SendGrid, which is a leading email API platform. And then in 2020, they acquired Segment, which is the market-leading customer data platform. And at the end of 2020, Twilio had about 221,000 active accounts, which is decent, and it obviously shows that they have a lot of room to grow. Now I'm going to go to page 92. We can see that their growth strategy for the foreseeable future is to increase their international presence, invest in their unique technology platform, accelerate the adoption of their technology, and focus on strategic acquisitions that add value to the platform that they already have. So obviously, in terms of growing internationally, that definitely seems like a pretty big opportunity I see, in my opinion, for the future growth of Twilio, considering that at the moment they currently only have about 221,000 active accounts. So there's a lot of room for upward mobility and not much downside risk from what it seems for Twilio. The competitive advantage for Twilio, which we can see on page 97, we can see that they talk about how they believe that they beat their competitors in these different areas. So global reach, credibility with the developers, ease of integration, platform scalability, reliability, and security, brand awareness, and as well as the cost of using their products over their competitors' products, which having pricing power is probably one of the biggest advantages that a business could have in terms of competing with competitors in the same sector. So now I'm going to quickly talk about two main risk factors that I took away from reading through the risk factors for Twilio. The two ones that stood out to me was the first one being that Twilio, their technology, it's still relatively new, so it's difficult to say if they'll continue to be able to grow at the same pace that they've been growing in the past. And their growth is contingent on consumers continuing to adopt their platform. And the second one that I thought was really interesting was that Twilio is pretty dependent on Amazon Web Services to host and operate their platform. And so if their relationship with Amazon Web Services deters, or if something happens to Amazon Web Services, then Twilio's business could be negatively affected. The next thing that I want to look at is their stock performance, which we can see from this chart right here, the stock performance graph. This is Twilio in comparison to the S&P 500 over the last couple of years. We can see that they've clearly outperformed the S&P 500, which is good for people who have been holding onto the stock for that long. Finally, I'm going to look at their financial statements, which is probably the most important part of looking at a business to see if it's a good investment, because understanding the financial health of a business, it's probably one of the most important things, something that value investors that are very successful like Warren Buffett, Charlie Munger, Peter Lynch do all the time. So we can see this is their income statement. Their revenues over the last years have increased quite a lot, from $277 million in 2016 to $1.7 billion in 2020. And we can see that, I'm not sure if it shows, their net loss, they've been losing money since 2016 to 2020, so they're currently not profitable, which is unfortunate, but that happens a lot with early stage companies where they're growing their revenues but they aren't profitable yet. And then obviously for the people who invest in it while they aren't profitable and then see the business turn a profit while they're holding onto those shares, they usually see a good return on their investment. But it is risky because obviously without profits, a business can't function. So Twilio in this case has to finance their business operations just through issuance of shares and through bank loans and things like that. So the next thing that I want to look at is page 161. We can see right here their cost of revenue, which is, it's increased from $5 million in 2018 to $59 million in 2020, with sales and marketing expenses making up a pretty substantial part of their cost of revenue. And then we can also see right here the differences in their total revenue. increasing in 2019 to 2020 by 55%, and from 2018 to 2019 increasing by 75%. So that's pretty good. Next thing that I want to look at is page 178. This is their balance sheet. We can see right here, total current assets have increased by about what seems to be like 50%, from 2 billion to about 3 billion, or a little over 3 billion at 3.3 billion. And then same with total assets, they've nearly doubled from 5.1 billion to 9.4 billion in 2020. Total liabilities have increased, but not nearly as quickly as total assets have, which is a great sign. Total liabilities have increased from 871 million in 2019 to $1 billion in 2020. And also total liabilities, just because it's lower, I mistakenly said earlier that it was definitely a good idea that total liabilities are way smaller than total assets, but it could also mean that Twilio, in some cases, some businesses enjoy taking on more debt even if their business is producing a lot of cash, because they can leverage their position. And obviously if they get a low interest rate on their debt and they get a higher return on that debt, then they can grow their business a lot faster. So it could be beneficial in some cases, but it could also be negative in other cases. And then we can see right here their total stockholder equity has nearly doubled from 2019 to 2020, from 4.2 billion to 8.4 billion. Next thing that I want to look at is their income statement right here. Sort of reviewed this before, but we can see that they've been losing money from 2018 to 2020. They've actually been losing more money. $121 million was lost in 2018, and $490 million was lost in 2020. So as Twilio ramps up their business operations, they continue to lose more and more money, which is obviously a huge risk, but it's pretty typical for some more early stage growth companies, especially in the technology sector. Here we see their cash flow statement. Their net cash from operating activities has actually increased, although they haven't been profitable. And the reason for that is we can see from depreciation and amortization, as well as stock-based compensation, those two things seem to be the biggest things that are eating into their bottom line on their income statements. But obviously, since those aren't cash expenses, those are non-cash expenses, on the cash flow statement, they get added back to show the actual cash provided by the operating activities of the business. So it seems that without the stock-based compensation and the depreciation being taken into account, Twilio is obviously producing more and more cash. And then from in their investing activities, we can see the main thing that they are doing is they're purchasing marketable securities, and also they are selling marketable securities. So they're purchasing more than they're selling, and then also they're acquiring cash from acquisitions. And lastly, through financing activities, or sorry, not acquiring cash through acquisitions, they're spending cash to make acquisitions. There we go. And then finally, from their financing activities, we can see that a large part of their financing comes from public offerings and issuances. So obviously, I mean, financing one's business just based off of shares and loans and debt and things like that, it might actually end up diluting the people who are currently holding on to Twilio shares, because they aren't able to grow their business based off of the profits from the business by themselves. So definitely a big risk there. And the last page that I want to look at is page 216, which basically breaks up the revenue based by geography. We can see that for Twilio, of the total revenue that they had in 2020 of 1.7 billion, 1.2 billion came from the United States, and 479 million came from their international revenue sources. That equates to a percentage of 73% of their revenues from the US and 27% from their international revenue sources. So that's pretty much all I wanted to talk about with Twilio. It definitely seems to be a bit of a risky investment, though, for me personally. I don't know about the people who are watching this video and what their risk appetite is. Let me know what you guys think about Twilio in the comments section below. I'd definitely be interested to know if any of you are holding on to shares of Twilio or plan on investing in Twilio in the future, and what you guys think of the business as an investment. Leave a like on the video if it helped you out, or if you guys pulled any value out of this video. Subscribe to the channel if you haven't already, and I'll see everyone in the next one.